Welcome to today's morning market snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now, before we get into today's key economic events, I just wanted to touch on what we got from the Federal Reserve last night. Now, of course, in line with expectations, we saw no changes in interest rates. That was very expected. I think the market would have been extremely shocked had we had a change in interest rates. But what was interesting about last night's announcement was the fact that Janet Yellen and the Federal Reserve revised down their expectations for the number of rate hikes they're expecting this year from 4 to 2, which is much more broadly in line with what the market has got priced in. So this convergence of expectations, I think, in the longer term is positive for the markets. Now, markets currently expecting one rate hike with a second one potentially earlier on next year, and I do think the market will have to raise its expectations more in line with the Fed. Personally, as I've been saying throughout this year, as I've been saying really since December, I think 2 rate hikes was always more likely this year than 4, and also more likely than 0 or 1, which the markets were expecting, just simply because once you start the tightening cycle, you do have to continue with it unless there is a broad shock to the economy, and we haven't seen that. The unemployment rate is still falling. We are still seeing signs of some wage growth. We are seeing inflation picking up as well, but I do also think that the rate tightening cycle has to be very slow in order to avoid any shocks to the economy, especially at a time when other central banks are continuing to ease. So I do still expect to see 2 rate hikes this year, and it's good now to see that the markets are more in line with what the Fed is expecting. And also there wasn't these communication shocks which we've seen, for example, last week from the ECB. So all positive here so far from the Federal Reserve. Now we're going to bring up the economic calendar for today. Again, it's another very busy day for the markets. We've already had some data out from the Eurozone, the CPI reading ever so slightly better than we were expecting on a year-on-year basis for the core reading. Still in negative territory for the overall reading, again dragged down by those energy prices. We've had some interest rate decisions from the Swiss National Bank which didn't change in line with expectations. We've also had the Norges Bank, which has actually cut interest rates, but again was in line with expectations. This afternoon, things are picking up again. We've got the Bank of England interest rate decision at midday UK time. We've also got some data to come from the US. Now, with regards to the Bank of England itself, we're not expecting any change in interest rates. Once again, the focus is going to be on its communication. Again, a number of central banks have had issues with the communication because the markets are really picking it apart very closely as of late, and any little suggestion that we're going to see a weakening any cuts to interest rates, for example, any loosening of monetary policy, or any suggestion whatsoever that we're going to see a change from the current trend, and we are seeing these major reactions in the market. So I think the Bank of England is going to have to be very careful with its communication. We've got the minutes to be released, of course, alongside the voting and the decision itself. I'm not expecting any changes in terms of the outlook from the Bank of England, and of course with there being no press conference, there's less chance of any communication shocks as well. We've got some important data to come from the US today. JOLTS job openings, of course, being important, still currently near those very high levels, so increasing number of job openings, which should hopefully lead to the employment rate continuing to come down and potentially produce some wage pressures in the future as well. We've also got the Philly Fed manufacturing index to come today, as well as initial jobless claims, CB leading indicator as well, followed later on this evening by the Bank of Japan monetary policy minutes as well. So plenty to come today. I do think it's going to be yet another volatile day in the markets. For more in-depth news and analysis, check out OANDA MarketPulse at MarketPulse.com. You can also find out more about OANDA and sign up for a free demo account at OANDA.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.